Well, the tech earnings have started, and let's talk about the Tesla number first. Today, Tesla just told us its net income more than doubled last quarter, $1.1 billion. That is up 134% from the quarter before. Wow, that's true. And it's also one of the most misleading numbers you will read this entire earnings season. Because in same 3 months, the actual business, the part that builds and sells cars, so its operating profit fall 58%. Record revenue, record deliveries, and the operating margin of 1.4%, meaning that for every $100 of everything Tesla sold, the business kept about a dollar 40. I'm Vikas, your host. This is what changed from being we don't chase headlines, we explain what changed. So, at first, let's start with three lines. Number one, net income doubled to $1.1 billion. That is on record revenue of the 28.2 billion. But the reality is operating income, the money that business actually made from operating, that is fell 58% to $398 million. 93% of the reported net income came from outside of the business. So, this was a record quarter for how many cars Tesla sold and a poor one for how much money it made selling them. The gap between those two facts is the whole story. So, let's walk it in rising order of four truth. Because Tesla's income statement this quarter has three layers, and each one is true than the one above it. So layer one, that is the headline. Net income of $1.1 billion, up 134% from the first quarter. If that's the only number you read, you would think that Tesla had a blowout. Hold, hold, hold that thought. Let's read about the layer number two, operating income. This is the profit from the business itself. Revenue minus the cost of building the cars, minus running the company. That number was $398 million, which is approximately down 58% from the quarter before and down 57% from a year ago. Operating margin, that is profit as a share of sales, came in at 1.4%. Quarter earlier, it was 4.2. A couple of quarters before that, close to 6. So the real engine did not just slow, it nearly stalled. Now, how do you double net income while operating income collapse? That brings us to the layer number three. And this is the part worth slowing down for. Tesla owns stake in SpaceX, Elon Musk rocket company. So this past quarter, one paper that stake went up in value by just over $1 billion. And under the accounting rules, Tesla gets to book that increase as income, even though it did not sell a single share and no cash changed hands. Here is the impact. I want you to hold for the rest of this episode. Just imagine you have a job and this month your paycheck was small. Your actual work barely paid, but you also have a lottery ticket sitting in your pocket. And this month someone told you it's worth a lot more than you're paid for it. You didn't cash it in, you can't spend it. But if you added that paper number to your paycheck and told your family, look, how much I earned this month, that's exactly what the headline net income figure is doing. Strip just out that $1 billion SpaceX paper gain after tax, that's 763 million. And strip out about 274 million of one-time tax benefits, and the business itself earned somewhere around $77 million, not 1.1 billion. That is 77 million. So one more number that make it concrete, like the Tesla earns interest on its cash pile, like a savings account. That interest alone, $422 million. That was the larger than the entire operating profit of the company. The savings account out earned the car factory. And here is a tale that Wing cares about because it's the kind of things that's easy to miss. Both of those adjustments, the SpaceX gain and the tax items, are brand new lines in Tesla's own reconciliation this quarter. Go back one quarter, two, three, four. They are just dashes. This is the first time Tesla has had to crave these out, which tells you how unusual they are. So, why does this matter beyond one messy quarter? Two reasons. Number one, the lottery ticket can fall too. That SpaceX gain reflects what the stake was worth at the very end of June. But SpaceX has reportedly lost more than 40% of its value since its peak earlier that month. The same accounting rule that let Tesla add $1 billion of paper income in this quarter will make it subtract paper income if the value keeps falling. The line that rescued this quarter could be the line that drags on the next one. That's the nature of making an asset to market. It cuts both ways. Second, and this is the counterintuitive part, the reason margins collapsed is not the weakness, it's spending. Tesla poured money in. Capital expenditure doubled to $5.8 billion, building AI, computing, the Optimus robot production lines, its own semiconductor factory in Austin, and the new mega factory in Texas. Operating expenses jumped 47%, with research and development up nearly 50% from a year ago. For the first time since early 2024, free cash flow, the cash left after all that spending, went negative to minus $1.1 billion. Now notice the nuance here, the cash coming is in from operating actually rose 85%. Tesla is not running out of money. It's choosing to spend more than it makes on a bet about robots and autonomy and chips. So here is the honest tension. If you believe that spending builds the future, robotaxi, Optimus, cheaper batteries, then a low margin, cash hungry quarter is the price of admission and you would expect it. If you don't, then you just watch a car company sell a record number of cars and make almost no money doing it while leaning on a paper gain to look healthy. Both reading are defensible from the same filing. That's rare. And it's exactly why this one's worth thinking about carefully. One more thing that is worth flagging. Quietly, regulatory credits, that's revenue Tesla earns by selling emission credits to other automakers, and its almost pure profit fell 67% from a year ago to $146 million. That cushion, which padded Tesla's margin for years, is fading. And it's fading right as the core margin needs help. So, where does this land on our conviction scale? This is the first full earning read we have scored on Tesla. So, we are stepping from an implied baseline of 5.5 today that moves to 5.2 out of 10. Down modestly, the operational momentum and the cash engine are genuinely real, but the profitability erosion, the negative free cash flow and headline propped up by a paper gain that could reverse all put the other way, moderate conviction and tilting cautions. And to be clear about what the numbers are, so these are not the buy or sell recommendations, just our assessments of how much confidence today's evidence deserves. So, three questions the next quarter will answer. Number one, does the SpaceX mark reverse? If that stake is written back down, the same line that doubled net income this quarter would cut it next quarter. Number two, the margin, does the margin bottom or keep sliding? 1.4% operating margin at record volume is number to watch. Cybercab, the cheaper model mix, and battery costs decide whether this was the floor or the trend. Number three, when uh, when we talk about the spending, so when it will start to pay, all that capex is cash out today. What's the first quarter where robotaxi and FSD revenue visibly start to offset it? So the real story of this quarter is not that Tesla's profit doubled. That's Tesla sold more cars than ever, made almost nothing doing it, and let a lottery ticket in its pocket write the headline. If you would like to explore more on the source calculation behind today's analysis, you will find the complete research report at vyng.io, vyng.io. Everything is sourced directly from Tesla's filings because trust is not built by confidence, it's built by transparency. I'm Vikas. This has been what changed from Wing. We don't report everything, we report what changed. Clarity, not clutter.